I mean, I think there's certainly a large pause in the UK market with all this uncertainty, and I think there is a lot of the UK institutions are just sitting back and watching, and that of course affects what the internationals do. So if the locals are pausing themselves, then maybe the internationals do. However, we are seeing unfortunately some deals fall out of bed because of this, but at the same time we are seeing other deals go through. One of the things I've really noticed and I've heard from leading lawyers in London is they are being asked to put in clauses for the referendum into contracts. So they will exchange on opportunities before, but they won't complete on deals until they see the result in June. The Japanese is a breath of fresh air. There's certainly a lot more Japanese capital targeting Europe and not just the UK. A lot of it is starting to look into the tier 1 markets in Europe. They actually haven't done much at the moment, but they're certainly making some big noises. But yeah, no, I think while the pause is happening in the UK, it's very, very beneficial for Europe and in particular Germany. So there is a shift of capital moving on to the continent. People are trying to find their returns and maybe having to go into the tier 2 markets. But I think one of the changes I've seen this year is there is a lot more institutional money coming from North America. So a lot of this private equity funds where people might naturally think are looking for the opportunistic value add opportunities are actually starting to look at the core products. I think we're at a stage in the market cycle where income is key and there is less risk appetite. The property fundamentals in Europe are looking a lot stronger, and the very, very favourable finance costs compared to the UK is attracting some of this capital onto the continent.